Alright guys, let's just do this. I'm just gonna like babble. I've got a pretty sore throat, so don't mind me guys. Can't really speak properly right now. So it's about 11 p.m. right now. It's Sunday, end of the week, and we're gonna get right into this, okay? We're not gonna procrastinate much at all in this video or talk about any personal things. So I want to talk about the nature of coins and their movement and how we can kind of look for opportunity. So this question is in my mind every single day, and we're talking about it from perspective of like rallying, okay, or rallies, or and also like consolidation phases, okay. So ideally, right, when you wanna long something, you want to do it in like the way I see it personally. There's so many different ways, but the way that I personally see when to go long, my favorite one is of course a very deep correction, okay? And when I say deep correction, I'm talking about a coin like Go, or I'll even make this smaller. You guys don't need to see me. I'm talking about Go, where we get flashes. So when flashes happen, they can bounce back incredibly quickly as well, right? And I like to play the most volatile possibility. So just as an example, right, when you see a really big crash coming down, there's going to be also a huge spike going up, a counter reaction, right? When you drop far enough, say that's 36%, you're going to counter up something. Here's 36, 37%, right? It's the nature of something. So I like to go long when there's a massive drop. And then it might reach some sort of Fibonacci number. But I'm not talking about like abnormal, just steady, like I'm talking about a V correction where it's really volatile, and I try to literally catch that knife by watching level 2. It's not really recommended for newer traders, but you develop those skills eventually. So here's a really good example. It would be on Bitcoin on February the 6th. Okay, and we'll do two examples here. Bitcoin on February the 6th, on 2018 and 2017, December the 17th. We're going to take those two exact days, if you guys are familiar with them. December 17th is when the bull rally ended. The bull market officially ended this specific day on the 17th. And then this was such a parabolic move up, right? That when it drops, check out that drop. Right, it reaches some fib number. I'll take the extreme range. Here's about 382, or sorry, 0.5, and then it ends up rallying hard. Right, it dropped literally, how much did it drop here? 44%, and then it ended up going up about 50%. We're talking about a $10,000 drop and then going back up to 1,500. So these drops are my favorite ones to play, where there are V corrections, and then it goes all the way here. This is February the 6th, right? And this V correction was the best. It was one of the most profitable ones because we were starting to see bullish divergence a lot on different time frames. I'm not going to get into that this particular video. So, and then the other one, of course, is we wait for a consolidation. Okay. So the other one is, the first one was basically waiting for volatility and just playing those deep corrections, or when it goes down enough, and then you're looking. Sorry, I'm gonna separate into two categories. And then the second one is when it goes down enough, okay? Slowly, gradually goes down enough, and you're using combinations like looking for bullish divergence on RSI, where you're getting like a lower high, right? Sorry, a lower high on the RSI, but a lower low on the actual price action, or the price in general. And then there's a consolidation phase, right? There's a consolidation phase, and things get tighter and tighter and tighter, and they eventually just break out one way or the other. Nothing really sideways for a long time if you take a look, okay? If you take a look, unless it's sideways only when it's getting incredibly tight, or if it's stale and there's just nothing going on, there's no development, there's no promise. Some coins can stay dormant for years until there's activity, right? But I'm talking about after a massive volatile streak like this, it's gonna squeeze into a smaller region all the time. And then eventually it might squeeze for, here was a long period. It was about 96 days, 3 months, and it was so little. It was only bouncing up and down 30%, well, 30% spike. Next peak was 23, and then it stayed in this region, barely, without counting that wick, for like 10% over 2 months, which is not volatile. And then, of course, it just ends up dropping to the downside. It's ended up dropping to the downside for 200 and how long here? It dropped for 6 days, and it dropped 51%, right? And then here, for example, there's consolidation, right? And then it breaks to the upside. So that's a second way to trade, in my opinion, right? Just being very, very general, where there's a lot of volatility, and it shoots up really hard, and then it drops really hard too. Then you catch it to go long. Or of course the other way is it spikes up, makes a parabolic move upwards, and then you try to catch it to short. So the opposite applies as well, right? And that's really aggressive in my opinion, right? And there's a lot of breakout traders as well. The people that really like it when things squeeze to a particular region. Here's a squeeze, okay? There's so many of these that happen all the time, and if you just watch it and you plan for it, and I'm going to give you guys two really good examples of just recent that I called, right? If you just draw these on different time frames, it just looks so beautiful. On a 2-day, right? Look how it looks right there, or even on the 4-day, right? It looks kind of gorgeous. But either way, we see it getting tighter and tighter in this particular region, and then what happens? Right? It breaks to the downside or the upside. Generally, that's kind of what happens. And then the break point, which is right there, what it likes to do a lot of the times is breaks down a lot of it, goes low, and it tries to break past this resistance, because that's the break point. So it now becomes a resistance that's going to be pretty difficult to surpass, especially if the triangle has been squeezing in there for a long time. And for Bitcoin in this particular case, it was squeezing in here for literally 90 days. So that's another way to play, right? So we're talking about the way you play during massive volatility, right? Massive volatility, how you trade is very different than the way you trade when there's consolidation. If you had to make two general categories, right? That's usually what it is. And there's less and less opportunity, of course, near the end, because the range gets really tight. But at the end of the consolidation, there's going to be volatility usually in crypto from what I find. It's going to go up or down, one way or the other, and then the volatility cycle starts all over again, right? And then it drops, it drops, it drops. Volatility cycle drops again. Like look at here, it spikes up 40%, and then comes right back down even more. No, 38 here. And it consolidates for literally, 40 days, and then it just spikes up. That was crazy that day. Spikes up to 64%. Wow. And here, it's just beautiful, isn't it, for Bitcoin, that how it's gone up now for 230%. So you're going to expect some sort of correction very soon for Bitcoin, especially since when we take our Fibonacci trend-based Fib extension, we can start from here for first point. Here's second point. I'd say this is about the third. Actually, I don't think I'm doing that one right. My bad. Here, there, and here. Okay? So you see that it's pretty funny that both of them do the exact same if you actually look at it closely. So I did this as ways 1, 2, 3, 4, 5. 1, 2, 3, here's 4-ish, and that's 5, okay? And when you do that, wave 1 is exactly 1-to-1, our Fib extension, and then wave 3 is 1-to-1, and then wave 5 is 1-6-1-8. So you're getting perfect extensions right now from this particular first wave. It's a really ugly first wave, but it still worked out. So anyways, just my quick thoughts on Bitcoin as well. And if you look at any of these particular coins, you'll see that they have had a massive run up, right? And it's pretty much the top for now. So anytime there's a run, I'm just picking Len because it's just the first coin that's there. It's gonna retrace a certain amount. Like just look at this particular structure. Let's say that we finally identified it was top here. Okay, for that one right there, right? That's just kind of hard. Bullishly divergent RSI daily didn't show much. 2-day probably the 2-day right here, right? The 2-day didn't show much, so we got to go on a lower time frame. So right here maybe, right? RSI can't really break out of those particular ranges, but still not enough, right? This one was pretty decent, shows us. Okay, now, either way, we're going to use, we don't really know when the trend has actually changed, right? But we can gauge it in a few ways to feel more confident that the trend is shifting. Let's say RSI didn't give too much indication, all right? We're going to look at it on other time frames to see this particular drop, okay? So if you look at the 12-hour, maybe that was going to help, right? Where we were slowly getting lower on the histogram, right? The histogram is crossing over to negative on the 12-hour, on the daily, or sorry, on the 8-hour, right? It's getting lower, lower, lower. One last jump maybe for an overthrow, maybe. That's a few crossovers right there. This one bounced off of it. Wow, that's a lot right there. Lots of activity. On the 6-hour, I missed that. So the 4-hour, that's tons of crossovers leading up to it, and it gets to such a high point, right? Usually it's like 1, 2, 3, 4, and the 5th one tends to drop. So it's decent. But you know, if you go on the daily, was it on the daily? No, the 12-hour maybe. Yeah. So price action would have been very helpful here. So just to give you an idea, right? We're getting tons of a series of fairly bearish doji types of candles. But anyways, I'm gonna get to the point, okay? Once we start to identify when it's bearish, here we're getting basically an upside down hammer or shooting star, right? Pretty nasty. Here we're getting almost a tweezer pair type of combo to the top right there. That's so nasty. Oh, the 2-day was just gross, right? We're getting that type of candle right there. I think we're getting the same one right here. Look at that. See the patterns? When we see that candle, shit happens. So this one's getting tighter and tighter if you notice on the 2-day as well, right? Do you guys see it? The wicks? It's getting very, 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 very tight, this range. Okay, so we see this doji type, shooting star type candle, then we get a tank after. And then every time that happens, we get a retracement. That's what I'm getting to. We get to a retracement of some number. Here it happened to be 0.5. We got a hammer candle and a 2-day. Up we go some more, guys, right? You don't just get a hammer candle with that type of volume out of nowhere. So we just kept going, and we're going. And then after that, we're going to get another series of a correction within a specific wave. Okay, so we got a correction cycle. Correction cycles happen all the time. So that one got probably not a bullish or not a bearish one at all. Very bullish sentiment, reaching almost 382. So then, usually only 5 happens. Okay, this is relating to Elliott wave just for the beginners. So you take your trend-based fib extension. If that was the first right there, we'll say, well, it's pretty cool how this one lines up as well. Slightly above 1-to-1 for wave 3, and then slightly above 1618 for wave 5. Pretty cool. So we can say that, hey, it's a possible mean count. It fits all the criteria. Looks great. So then, usually we're looking for 5 waves. Like that, okay? 5 particular waves. I think that this one's actually the B, with the 5th wave right there. Actually, I'll just leave it there for now, okay? So if those were the 5 right there, the Fibonacci retracement only happens for waves 1 of the wave 1 structure. Fibonacci retracement of wave, the retracement of wave 2 is only dependent on wave 1. The retracement of wave 4 is only from 2 to 3, or wave 3, okay? And then a lot of people make this mistake. Okay, so notice that I'm just going to keep it like that. So you guys have an idea of where the retracement structures are. Okay, and a lot of people make this mistake. They take the retracement just for wave 5. Right? Do you guys kind of get the mistake right here? So instead of taking that wave 5, you're actually after 3 waves or 4 waves, 1, 2, 3, 4, or 2 impulse waves, which are waves 1 and 3, and then there's wave 2 and 4 as well, right? Which are the correction waves. After wave 5, you should be taking the retracement of the entire structure. That's the hard thing to identify, and that's what can screw people up when you do technical analysis. Oh, what did I just do? No! Did I just take a random one by accident? Or go to a different one? I hope it's still there. I don't want to draw it again. Okay, cool. That makes sense. So once again, wave 2, you only take the retracement for wave 1. For wave 4, you only take the retracement for wave 3. For wave 5, you take the retracement for the whole thing if you can identify this specific structure. Right? So then, after this happens, let's just hypothetically assume that this happens. That's in time. Now, all of a sudden, this becomes the first wave. As you guys probably know already. I'm sorry if it's redundant for some. And then this becomes, remember how we were drawing 5 waves there? And then you say that now this is now 1, 2, 3, 4, 5, whatever we'll just call that, truncated. Or a higher B there. The ABC, the higher B. So now that might make 5 subwaves, but now this becomes 40. So now we're going to take all wave 1. See what I mean? Now this becomes waves 1. These are the small subwaves inside of that wave 1. And I'm sure in the 5 here, in this wave, we can count 5 as well. And in this one and that one if we go to a smaller time frame. So then now, you take your ABC, right? Assuming it's an ABC of some sort. Okay, whatever it makes. And then now this becomes waves 2. Okay? So then you can't make the mistake of taking the retracement of just that. Of just the wave 5. Because if you do, then it's going to shoot way below, like way past your target there of support. And you're just going to put your foot in your mouth there or shoot yourself even, you know what I mean. I'm using the idiom for regretting it, which I'm not really coming up with right now. So, let's just say we trace to like, 0.5 or whatever. Or 0.6, right there. It retraced to right there. Okay, that means that this right here, we're going to say it went up 1,500%. Okay? 1,000. Was it 1,500? Can't remember. 1,000. Wow, okay, 1,500. 1,500%. Okay? That's what it did, literally. So then now, if it went up, and the price was, 89 cents. If it went up 1,500%, right, hypothetically, and then it dropped to the 0.5 Fibonacci level, which is 50%, right? So technically it's going to drop back down to the half of the 1,500 level. Make sense? Okay, let me say that again. So if it went up 1,500%, excuse me, my eyes are itchy. If it went up 1,500% and it fell down 50%, which is what the Fibonacci retracement level refers to here, that means that it would come back down to the 750 region, right? Which is half of 1,500. So if the coin was at 90 cents, which it was, and it fell down 50%, so the coin would be at 45 cents, right? So now the range is tighter. Does that make sense now? So then now, we're taking basically 750%, okay? That's the move going down. Now we're taking 50% of this fib level. Now, I got another thing to talk to you guys about, okay? Now let's just say this is not wave 2. This is just A or something, or wave 1, and then there's a 2 or a B still. And then now, you take the retracement of just this range. Okay, this range again, right there. And let's just say it goes up to, 0.5. Right? That means that it's going up 50% of 375, which is what? Right? 375%. So each move, each consolidation, okay, can get smaller and smaller. And then after that, you take your Fibonacci retracement range of just this guy. Okay? And then let's say this one goes 50% only. Well, now you're at 100 and whatever that is. Okay? Half of 375. So the range gets smaller and smaller, so there's going to be less volatility. That's explosive, like here. So then it gets into a really tight region. We'll just play along here. Okay, gets into a really tight region, and then eventually it's going to explode outwards. One specific way, you know, it could be whatever shape it is. Oops. I'm just going to clear all of it. You know, let's just say that this ends up making some sort of shape like that eventually. I'm not talking about lend, I'm just talking about any coin in particular. And then, you know, the range for the retracement gets lower and lower and smaller. So the percentage movement is actually a lot less. That means that, you know, near the end of it, like I was saying earlier, when it's consolidating tighter, there's not much opportunity until it starts to explosively move one direction. So to summarize this really quickly, I was basically talking about two different types of trades, right? You can really make. One is when there's really explosive movement. That's crazy volatile, which I don't recommend to like get into it unless you're more experienced, because the more volatile it is, the more dangerous of an environment it can create, and it can really damage you in the long run if you lose your entire balance rule, right? If you're trading on in a professionals market, you could say, where it's so volatile and you don't have the experience, you're going to get maybe hurt. So I always recommend to stay away from things that can look very lucrative, but it can also harm you at the same time, and that's not what you really want. So these movements are amazing, right? And they're very, very volatile. I stepped away from it and completely forgot what I was talking about. But I think I was talking about the volatility that we can trade, right? When we have these massive parabolic type of gains. And the other one is we're also brushing. The second way would be when it's consolidating, that we're waiting for a breakout, and the tension between the bulls and the bears, they get to like a very abrupt type of end, and it becomes explosive one way. And just to summarize, we were also talking about how as the movements get tighter, the percentage movements are a lot less, which means that there's less opportunity until we get that explosive type of movement. Then we're going to be able to get to that volatility stage again, right? We can't trade a sideways market, it's very hard. And just to brush up really quickly on all these coins that I'm monitoring here, I'm looking at, let's say, Lend, Atom, TRX, BTC, not BTC, but not right now. That's always monitored on the side. That one was going to be Link, Omizi Go. That's it. Omizi Go. Just watching it for now, okay? Omizi Go might sideways for a while. You just never know. It's on the 4 hour there. It's on the 55 EMA still. So it's been on the 55 EMA there for a long time. So this is kind of like a tension right now between the bulls and the bears. It spiked up here to like 580, but I just couldn't really get past it. So a little bit disappointing right now for Omizi Go. But if you look at all these coins right now, it's really easy to see that Lend, okay, that Lend right here is still in the consolidation mode. Like, let's say I go to daily. You go to daily, and so you go to the daily and you see that there's literally no correction to the downside yet for the top left, which is Lend, right? You still see it consolidating tightly, no massive drops or anything, only 20%. You look at the Omizi Go and it's dropped like 50%. You look at Atom right here and it's beginning its phases. You look at TRX, same thing, right? So we're talking about the most progressed in terms of like progression. We were expecting a way bigger jump up from Atom, but it's actually slow, right? In time frame, it was actually consolidating for about 30 days already. That's really long. Link was the second with about 12 days. And then the Omizi Go was consolidating for 10 days. So in order of progression, and the TRX is around there as well, around 10 days. And then you take a look at Atom, it's been consolidating now for 7. And then I think this one's 2 days ahead. 5 days for this guy, yeah. So we're seeing the progression of, for example, ADA consolidating there for like 24 days and then dropping finally. But it didn't really go up much. It went up about 17%. But if you take a look at a coin like Link, that dropped about 36%, it went up a lot more. It went up 39% versus 17%. Omizi Go didn't even break up yet, right? Then you take a look at, for example, TRX. It fell down 33%, and then it rallied upwards 28% for TRX and 38%. Was this 28% or 38? 28% for TRX, and Link did 38%. That's crazy, right? So right now, if you take a look at Atom, it just looks like it's trying to do the rally upwards, right? It's trying to do what these guys have done, what this guy has done, what this guy is trying to do, but it's not doing it right now. What this guy is trying to do too, right? This guy's trying to do as well. He's like halfway there. This guy right here, TRX and Link, they're kind of progressed more than the other coins right now for progression and consolidating, because it broke out already, right? And it broke out with pretty big numbers, 28%, 38%. ADA is still trying to get out there. It's already starting, but it's a little bit behind. It's still going to break out, I'm sure of that. Whereas with Music Go, it's trying really hard to break out, right? It just can't, but I'm pretty sure it's going to go up as well if it's going to follow anything like Link or even TRX. But what intrigues me the most right now is Lend, despite its very low. Let's take a look at it right here, okay? So Lend, it's only at $18 million. The buying volume is like really drying up right now. And what I like about it is it's gone up literally, how much? 1,900%, and it hasn't even started to drop yet. So what I'm trying to do is literally catch the fucking drop. If I can catch the drop, and I'm talking about getting the biggest one, okay, like, you know, that's going up 1,700%, we'll say. Even if it goes down 38% of that, 38.2 from there, like roughly around there, that's a big 20 to 30% possible gain. So that's why Lend is definitely on my mind. Anyways, I'm just kind of babbling my thoughts. I hope that you guys enjoyed this video and helped out a little bit. It's not really brushing up on like the spreadsheet or anything. It's just kind of rambling. So to update you guys here, I haven't really haven't really updated anything since like the 25th or the 20, or sorry, on the 28th. Yeah, predictions are going great. Last one was the ADA one. That was a great video. We hit 11.86 and I predicted 11.85. That was crazy, that prediction. Right? So do you guys remember that one that I made? Here's the ADA one, right? That I made at August 28th at 4:30. Strong potential, 382 fib. Right? 10% rally down. And and this is the one that ended up coming to fruition. The ADA right here. So it went up literally 10%. That was a very good trade. I'm very proud of myself for making that call. Let me show you guys it. It's one of my, I've been making some really scary, accurate predictions, people have been saying. Because this spreadsheet's just like, you know, OCD moments, so you get really, really in tune with all of it. So yeah, that was the rally. Here's the 382 fib retracement, which people kind of ignored this one, but it's my favorite. It spiked right there at 382, zooming into a lower time frame, right? I made the prediction August 28th at 4:30ish. 4:30, so around this time right there, when it was about 10 cents, that it would spike up 10%, and it went up about 9%. So pretty accurate, I'd say. Really, really, really good trade there. I didn't take that one, believe it or not, though. I made another good trade with Lend. You guys can see it in the... You're going to see all of this in one particular series that's being released in 2 days, whether I make double or not. Right, starting with an opening balance of 11.25. I already grew it to 18.80 right here. Pretty cool. I grew it to 18.80, which is a 67% gain. And I'm actually using... I'm not playing my entire bankroll. You know, I'm not leveraging times 10. If you guys take a look at the position sizes that I'm playing, they're very, very modest, ranging from 2,600 to 4,000 roughly, and I'm only with an opening balance of about 11.25. Okay, so I can margin this thing to literally 10,000 if I wanted to, right? Times 10. Even though my balance keeps growing here, and I'm already up $755. And keep in mind, this is just for you guys. I don't want to hear the bullshit of I need more money to play bigger so I can make more. It's not like that at all. You gotta play to have the fucking experience first. to be able to manage these types of spreadsheets, and they're simple. It's just a matter of routine doing it. It is tedious as fuck, but that's how you get the money, right? You guys have seen me do this in 20, like what, 18 I did it? No, 2017 I started doing this in the summer, right? Remember? And I just stopped doing it for the public. But now that you guys are the premium group, I'm going to show you how to get into a really good rhythm and routine. Because this is what you want. Yeah. So that was a really good, amazing fucking prediction. So pretty good so far, right, guys? 167%, $755, going from 1128 to 155, or sorry, 1180. That's literally in only 3 days of trading, or 5 days of trading. Sorry. So no, that was yesterday. I did it 29. So 30 days, September, April, June. So I'm gonna give myself today and the 31st and the first, and then the first, and that's it. Because then we can go from 25 right to the first there, one full week, right? I plan to double this for sure. And then the next one, we're gonna go $5,000 challenge. See where you guys can actually get this in there, or see like you guys can challenge me on it as well. I'll probably update it more frequently, like maybe upload every video or every trade to be even more transparent. But anyways, so right now my thoughts are pretty easy, right? Like I'm just waiting for Len to figure this shit out, because it's going into this triangle. I just want to summarize really quickly again. Shit's gonna happen. Look what happened with Link. Right? Like look what happened with Link when it just kind of. So we just want to wait for it to consolidate, and then once that happens, bam, it's go time. So this is Len. Clearly something's gonna happen. Look at Link. What happened? It went explosive, right? So now we try to look for formations and other ones. That's most likely going to be found soon. Okay, and we got to remember that coins like Link and TRX, they're the leaders right now in the rallying up that began to be originally. Okay, so now if I'm right, I'm gonna expect another huge drop down on pretty much TRX and Link. Yeah, it's gonna be some pretty massive corrections. I mean, you guys, like, we're not just gonna go to the moon. We're talking about 5 solid months of literally going to the upside for a lot of coins, right? That's a really long time, guys. So you can easily expect that the correction period is going to be a lot longer than you might think as well. So it has been about 168 days now, 5.5 months of just straight rallying in the thousands of percent. So you guys better expect some consolidation to happen, because the run is over. I'm being honest. The bull run is over for now, because it's correction time. As much as we want to be, wanting it to go as high as we can, it's not going to happen right now. I would bank on it, because I'm just seeing, unless we're in the craziest bull market, I don't know about it yet, right? So I'm expecting more consolidation, and we're going to learn how to play in a consolidation phase market together, okay? Because even though we're in a bull market, longer term, bigger degree, it doesn't mean that in that small period of time, in that time frame, we still can't consolidate. So in that smaller degree, we're in consolidating phase. We're neither in bear or bull. It all depends on the degree. So anyways, I just want to keep this video. Oh gosh, it's 30 minutes. I'm sorry guys, I'm gonna let you go now. Have a great night. Bye now.